Hey, what's up guys? John here. Michael Burry has made some very, very strong predictions and he's put his money where his mouth is. And over the last 3 crashes, he's made an absolute fortune. And I believe that he's going to make a massive, massive fortune, the biggest one he's ever made coming up very, very soon with a couple big stakes that he just took. And it's not just him. People across the board now are switching from being extremely bullish to now bearish. Another gentleman named Jeremy Grantham. He runs a hedge fund that has about $20,725,000,000 worth of assets under management. And this investor predicts that U.S. stocks could decline as much as 80% from their highs, ringing the alarm of imminent recession and cautioned there could be painful fallout from the wider surge in asset prices. Now, I would consider myself to have an outlook very similar to Michael Burry, which is one that is hesitant to jump on the train of optimism when we are in a euphoric type of environment, investing environment like we've been in over the last couple of years, where people throw out logic and reason from right out the window and just bet because everyone's jumping on, meme stocks and house flipping, and everyone's just jumping on the bandwagon because people are getting rich on investments they know very little about. When you see people making a fortune in investments that they themselves could not understand simply or explain to someone else simply how it actually works and how the business operates, then you know that you're in an environment that is likely a bubble. But this is unique here because we're seeing someone like Cathie Wood, who has made a fortune over the last couple of years, but also has lost a ton of money recently. Now she is exiting Tesla, and she now is, it's no longer her number one stock, but at that same time, Michael Burry, he was revealed to be in a $530 million short position, $500 million short position on Tesla. And if you were to tell someone, hey, I'm going to short Tesla 6 months ago or a few months ago, people would have thought you were crazy. And when you look at this, look at the Tesla stock in January 3rd, the beginning of the year, $1,200, $1,200, $11.99, right? Now it is at $663. Tesla's dropped by roughly 50%. 50%. And Michael Burry made this prediction, and he said that in the fourth quarter of 2020, Tesla's $270 million net income was enacted by the sale of $401 million in regulatory credits to its automakers, essentially that their income is not what people actually, what they see. What they see is that they're selling a lot of cars and they're making money, but in reality, a lot of their income is coming from, deals with the government. And so what we're going to start to see here is this Tesla stock, likely not going back to $1,200 anytime soon. But Michael Burry has made a string of new predictions, and his new predictions are something we need to pay attention to. Big short investor Michael Burry warns stock will crash and rallies won't last. Here's a roundup of his recent tweets and what they mean. Michael Burry, the hedge fund manager of the Big Short fame rang the alarm on the greatest speculative bubble of all time and all things last summer. He warned the retail investors piling into meme stocks and cryptos that they were careening towards the mother of all crashes. The Scion Asset Manager chief dire prediction may be coming true as the S&P and NASDAQ indexes have tumbled 15% and 24% respectively. In a recent tweet he deleted, Burry has taken credit for calling the sell-off, explaining while he expects the declines, he cautioned against buying into relief rallies. Paradigm shift speculative peaks during the S&P 500 bottomed 13% lower than 2002's bottom in 2009, 17% lower than 1998's LTCM's crisis low in 2002, and 10% lower than 1970's low in 1975, 15% lower than the COVID low SPX 1862, right? And he goes on to say that the S&P index has rebounded strongly from the pandemic's crash in the spring of 2020, rising from the low of 2992 points to 4,089. However, this could plummet by 54% pullback to 1862 in the next few years. Now, what we have to take into consideration here is that over the last couple of years, we've had so many people jump into stocks and invest that know very little about investing, and they really probably should have stayed out of it. But they jumped in because their neighbor, they go to church, the person next to them was getting rich, they go to Wawa, they get a sandwich, the person making the sandwich is getting rich in Dogecoin, they go everywhere, everyone's making money. So what do? They follow the trend, they put their money in the markets, right? but a lot of people actually live on fixed incomes. Now, if you look at the fixed income ratio, Social Security Administration, for example, estimates that over the 46 million Americans receiving Social Security retirements, 21% are married, 45% are single, rely on Social Security 90% of their income, right? So what we're going to see is he predicts this big pullback to 1862, but we have to also consider the fact that we have rising inflation with a large market of people that invested in stocks, that invested in the markets because they needed to keep up with inflation. So they're saying, hey, everything's getting much more expensive. I need to make more money. So they start taking on more risk. As the market pulls back and inflation continues to roar, gas prices continue to increase, what happens? People are going to be forced to panic sell because they're going to need money. And so as this happens, all it's going to do is build out more of a sell-off. So I believe we're going to continue to see more and more and more of a sell-off with these, dead cat bounces where we're going to, slowly climb up and then crash. Like if we look at the Dow Jones, for example, over the last year or the year to date, it's just been a bunch of these little peaks and valleys, but the trend is consistent. We're just heading down. We're heading down in a very, very big way. When the S&P 500 has crashed in the past, it has traded lower several years later, Burry noted. He pointed to the index bottoming 13% lower in 2009 than it did in 2002, 17% lower than in 2002 than it did during the long-term capital management fiasco in 1998, and 10% lower than 1975 than in 1970. And the benchmark indexes follows that historical pattern. It could trade 50% lower than its level in the spring of 2020, Burry said. Dead cat bounces are the most epic. 12 of the top 20 NASDAQ one-day rallies happened during the 78% drop from 2000s. The top 9 of the top 20 S&P 500 one-day rallies happened during the 86% drop in the 1929 top. I believe he's right on the money here. I think he's going to make an absolute fortune. Everyone, even Elon Musk was saying, Elon Musk called him a broken clock last year after the Scion chief bet against Tesla stock, predicting it would collapse in value, and questioned Musk's motives for selling his company's shares. Elon Musk sold $20 billion worth of Tesla stock over the last 9 months, most of which was right at the high, right in around $1,100 to $1,200 a share is when Elon was dumping his shares on everybody, right? And so he's dumping his shares saying he needed to do it for tax reasons, and then also dumping shares saying he needs to buy Twitter, and then there's all this back and forth on if he's actually going to purchase Twitter or not. Elon, I believe, knew that his shares were overvalued and that they were going to be coming down, and he needed to pull some cash and risk off the table. Michael Burry knows that the market's going to crash. Everybody, I believe, that's not completely motivated by just seeing the markets continue to climb, and that really just wants to see the true state of the world, the true state of the economy, knows that we're going to be stepping into a really, really big problem. If I had to pick one investor that's really hitting it right on the head, I would say it's Michael Burry. Michael Burry made a couple other very unique positions too. He said that the third time's a charm. 10 years leading into the financial crisis, S&P 500 2000, white S&P 500 today, and green Dow 1929. Gotta love human nature. You look at that, right? It's everything, nothing if, gotta love human nature, nothing if not consistent. The U.S. stock market appears to be following the pattern of previous bubbles, leaving it poised for a monumental crash, Burry noted in a May tweet. The Scion chief pointed to the S&P 500's trajectory over the past 10 years, noting it's strikingly similar to the index chart of the decade leading up to the dot-com crash and the Dow's chart for the 10-year before the great crash of 1929. Burry suggested that human nature was behind consistently decade-long build-ups and implied that history is repeating itself. And I fully agree. Except, again, as I mentioned before, the main difference is that this recovery is going to be even more painful, because if people don't sell on the way down, as technology and AI and robotics and all this stuff happens over the next 5 years and 10 years, people are only going to be more sellers. They're only going to be motivated more to sell as the cost of living only increases, inflation gets more out of control, and you're going to have less buyers out there buying. What real investors are going to do, I mean, like the real billionaires, the real elite, the wealthy, they're going to buy real hard assets. That's what they're going to buy. Infrastructure. They're going to buy houses. They're going to buy land. They're going to buy things that are real. That's what they're going to buy. They're not going to speculate as much, I don't believe, over the next 5 years in stocks. Because for them to speculate on these stocks without, I mean, they might take short positions, but for them to bet on the economy recovering, most people, most Americans aren't going to have the means barely to survive, let alone to invest. That's what I believe, and I believe that's what Michael Burry believes, and I think that's why he's putting his money where his mouth is. I think he's going to make an absolute fortune, and I think a lot of the people that said Michael Burry was wrong are going to end up eating their words over the next year or two. This is the opportunity, though. This is not like a pessimist position. There's an opportunity here. The opportunity is to understand where your set of skills are. Where is your knowledge? Where is your set of expertise? What can you do to highlight that set of expertise over the next couple of years? And how can you position yourself accordingly to profit in the maximum? Because there's a huge opportunity to make an absolute fortune over the next 5 years. And I believe that's what we really have. We have probably 3 to 5 years to make an absolute fortune, invested very, very well, and build out a hedge of security and safety for ourselves and our family, and make smart decisions, no longer speculating on things that we don't understand. You do the right things over the next few years, you're going to make a killing. You'll make a ton of money, and you'll be able to set yourself up, set your family up. That's what I think is important right now. But I'm curious, what do you think is important? Drop your comments below. Hit the like button. When you hit the like button, YouTube's going to share this content to educate more people about what's really going on in the economy. Also, subscribe to my second YouTube channel. It's going to be a podcast and interactive show where people can call in. It's going to be really, really cool. And then LinkedIn, Twitter, TikTok, everything's in the banner. I'll catch you guys later.